Okay, well, hello everyone. Welcome to your office hour for this week. It's Monday, July 6th. Hope everyone had a good holiday weekend. I know I did. Um, what I want to try and do today is talk a bit about commercial leases, since this is where I spent a majority of my career before I started teaching full time. This seems like an area where I have a lot of information. Um, so, what I want to do is go through three documents with you. The first is a commercial LOI, letter of intent. The second is going to be a commercial lease application. And then we'll get into a commercial lease agreement. This is specifically the Texas Realtors commercial lease agreement. Completely worth noting that everyone else's, how do I want to say this? You are likely to get quite a variety of lease agreements out there. I'm using the Texas Realtors lease agreement because it's one I have access to, right, as a realtor member. But it's by no means is it a kind of fait accompli that if you're entering into a commercial lease agreement in Texas, that someone's going to use that agreement, right? Oftentimes, landlords will have their own agreements. Sometimes a tenant will have their own agreement if the landlord doesn't and the tenant wants to use theirs that they've had their attorneys prepare ahead of time. I've worked for clients like that. So, yeah, but the idea here is if we go through the commercial lease agreement, I'll show you some parts of it, and I'll show you some clauses that are typical. Essentially, if you understand one lease agreement, you will be very well set to understand other commercial lease agreements that you come across, right? So you'll know the basics and the fundamentals, and you'll also know how to spot differences between the different kinds of lease agreements. So you got to start somewhere, right? So what I'm going to do is share my screen, and no, it's not going to work. Let's try this. One more thing. Yeah, we can do this. Okay, great. So I have the document pulled up. So as I mentioned, we're going to start with the commercial letter of intent. Now, this is a 3-page document. Again, this is a Texas Realtors document. Here's what I'll say about a commercial letter of intent. A letter of intent is simply deal outlines, right? It's not an agreement in and of itself. It's simply someone sitting down and working out what the terms of an upcoming commercial lease agreement are going to be. Now, an LOI could be the result of discussion between the landlords and the tenants or their representatives, right? Or it could be kind of an opening salvo. One side or the other says, hey, we're interested in doing a lease. Here's an LOI. This is our initial kind of offer letter. And they could just frame it as a letter of intent or an LOI. It could be on a form like this. I've seen them frequently just listed out as memos, really just something you could type up pretty easily in Word. So it doesn't have to be super fancy or super formal. The point of an LOI is just to make sure that the parties are all on the same page with the terms of the lease, and then they will take that LOI and drop those details into whatever form lease agreement is being used. So that's the thing to consider here. So here, we're defining who the landlord and the tenant are, what the leased premises is. Now this could be a just an address, right? If you're leasing a whole building, it could be an address. If you're leasing part of a building, it could be the suite number. If it's, let's say, it's just a bare plot of land, it could be an appraisal parcel ID, right? It could be a legal description. So there's a variety of ways of putting this. I mean, typically, if you're leasing like Suite 140 in a building, you're probably not going to need the full legal description in the LOI simply because you could just lease the building address and the suite number. All right, as far as the leased premises goes, The lease premises size, right? So more or less, just a description of the size of the suite, whether it's 1,800 square feet, 2,700 square feet, right? Whatever it is. And again, it doesn't have to be exact at this point, just to the best knowledge of everyone involved. The term, whether this could be a 30-day lease, 6-month lease, 5-year lease, right? Just depends. Usually it's going to be one of those. Then commencing on. So at this point, typically you don't have to give a date certain. In fact, you're normally not going to want that unless it's the sort of lease like bare land, for example, it's currently vacant, where you could go ahead and occupy it. Really, at this point, the idea of giving a commencement date is more of a target. So, it's July right now. If I said September 1st is a commencement date, we're assuming we can get this lease signed in a reasonable period of time and get, if it's an interior space, get the space built out, right? Listing the base rent. So if you don't know, in a commercial agreement, rent typically comes in two forms. One is a base amount that's paid every month. And this could be a flat rate over the term of the agreement. This could be have a step-up rent structure where every year it goes up by a predefined amount, right? It could be 50 cents per square foot per month, or per year additional, or $1 or whatever, right? Depends on whether it's a monthly or an annual rate. I've seen both, incidentally, and the types of properties that tend to get quoted as monthly versus annual varies from market to market. So what I've traditionally seen is that office space is quoted as annual rent, and that industrial space is quoted as monthly rent. But depending on the market, that could be switched backwards. So it just depends on what is going on in your market, or frankly, just how the landlord's advertising it, right? So you have the opportunity here for the amount per month or per square foot per year, and then the total base rent over here in a dollar amount. But we'll have this base rent, but we'll also have additional rent. So a lot of this and we have the opportunity to check 1, 2, 3, or none of these, right? The first kind of additional rent to consider is expense reimbursement. So usually some expenses of running the building above and beyond, are passed through to tenants. And that's not an amount that's captured in the rental amount. So typically there's two ways of doing this. One is some or all of these costs are just passed through, whether it's their pro rata share, right? That is, if this is a 10,000 square foot building and you're leasing 5,000 square feet, I'm passing through taxes, insurance, common area maintenance, anything else to my tenants pro rata. So the person leasing 5,000 square feet has to pay 50% of those costs. The person leasing 2,500 square feet has to pay 25% of those costs, right? Or you could have, and that's what I've typically seen in office. So I've typically seen in industrial environments. Let's put it that way. Is this just kind of full pro rata share reimbursement? The other is pro rata share in excess of the base year. So there's an idea that if you start a lease in 2026, for example, that you as a tenant are not really responsible for building costs up to that point before you're in the building. But the way that those costs change after you're in the building, you could say that part of that is attributable to you as a tenant. So essentially any increases in those costs over what was paid in the base year can get passed through to tenants on a pro rata basis. And I've seen leases that are 20 years old where the expense reimbursement part is quite a bit larger than the rent part of the rent, the base rent in that case. So that's very common in some leases. Or you could have it as a pro rata share in excess of an expense stop. So example, it's not whatever you're paying this year, it's we give a specific dollar amount per year that when the landlord pays above that, the tenant's going to pay a pro rata share of the excess. You could also have a Usually this is going to be a retail tenant who's paying a percentage rent. You list whatever the percentage is of the tenant's gross sales in excess of, and the typical way of doing that there is the base rent. So essentially the tenant's going to pay the base rent every month, but if their percentage rent in any given month is higher than the base rent, they pay additional rent for to keep that percentage rent in mind. And also parking. So usually building owners do not have unlimited parking, and if this is a multi-tenant situation, they have to figure out how to divide out the parking among their various tenants. So in that case, they would, if it becomes a supply that's sufficiently limited, they may have to start charging for them, right? Whether those are reserved or restricted or common area. And it could be that, a tenant says, well, most of our employees are fine to just park wherever in the parking garage or the parking lot, but the president and the VP, they want to have guaranteed parking spaces, so we will be willing to pay for dedicated parking spaces for the two of them. So they'll pay an amount for that. I worked on a lease agreement once in Calgary, Alberta, and the big thing for that lease agreement was the person who was in the office said, look, what I need is a heated underground parking space, because think about Calgary, Alberta. It gets really cold for a very long time in the year. So they said that's a non-negotiable. I need that. And God, this was a while ago, and I think that was still like $400 a month, Canadian, but still. That I spent more time trying to tell the people at the client why they needed to approve that $400 a month rent than I spent negotiating the whole rest of the lease. So this happens a lot in commercial brokerages. Sometimes you spend way more time selling the deal to your client than you do negotiating the deal with the other party to the transaction. All right, some expense reimbursements. This is just where the landlord's giving a projected expense for operation of the property. So just to give you a base idea of what it costs. Are there renewal options? And this is just a blank, so you would just write that out. Let's say it's a 5-year lease. The tenant might want, 3 5-year options to extend to take their total possible tenancy out to 20 years. They might want to be able to extend at shorter intervals. So this is a very common thing that you would have in a commercial lease, especially due to the cost and expense of locating a commercial tenant and building out a commercial space. It's common that both the tenant and the landlord are going to want that tenancy to continue beyond the initial lease term, hence the renewal options. The security deposit, this could be based on any number of things. It could be based on a month's rent, 2 months' rent, whatever, but that's up to the landlord to decide what that's going to be. All right, tenants use. So this is an area where commercial leasing really diverges from residential leases, for those of you who've been involved in residential leases. Because in a residential lease, what is the use of the property? Residential. People are going to live there, right? But in a commercial lease, you have all these other options. Probably not residential, right? But it could be anything. There's kind of 2 ways of approaching this. One is saying all lawful uses. Most landlords don't want this because landlords want to control how their properties are used. And this is for a variety of reasons. Think about a retail shopping center. Landlords typically will negotiate deals with their tenants in a retail shopping center to say that a certain type of tenant will be the only type of that retail space they will have in their shopping center. So they lease out space for a Mexican restaurant, for example. Typically in that lease they say, and we won't lease out spaces to any other Mexican restaurants in the shopping center. Or it could be any other restaurants or any other sit-down restaurants, for example. They might still have a Subway further down in the shopping center. So landlords are usually going to want to be very knowledgeable about a specific type of tenant use. That use could just be office, right? Easy enough. But still, they're going to want to know what that use is. I know when I worked in commercial property management, when we had to go take the certificate of occupancy application down to the city so it could get inspected, and so the space could have a CO so the tenant could occupy it. We, on that application, we had to put what the use of the space was. One reason for that is that the city wanted to know if there were any sexually explicit businesses being operated in anywhere in the city, frankly, because they wanted to, I guess, keep those uses to particular parts of the city. So yeah, that was always a checkbox on the CO application. Was is this that kind of business? I never had to get involved in any of that, fortunately. Yeah, so that's the tenant's use. Tenant improvements. Now we have a checkbox here. This is to be completed by landlord on or before a certain date. Landlord might want to limit the amount of their improvements. They could put a dollar stop in there, with the tenant being responsible for anything above that. Or we could have the tenant doing the build out and the landlord will reimburse the tenant up to a certain dollar amount, right? But as far as tenant improvements, this could be very simple. This could be very complex. So a simple example would be, depending on the condition of the space, new carpet, paint the walls, replace any stained or dented ceiling tiles, and we're good to go, right? Or it could be, you could have to refer to a plan. You could say, yeah, this is currently like the space that's ripped down to the studs, and we have an architect here that drew up a plan, so this is how we want it built out. Depends on the lease, depends on the landlord, depends on the tenant, how far everyone involved wants to go to build out the space, right? And just build out is its own special process. I think I could do an hour easily just talking about the build out and what could go wrong and what could go right with it. We have here brokers representing the landlord and the tenant. We would put that. There could either be a separate written agreement with the landlord to pay fees, or it could be set out right here. But typically, this is not the first time this is going to be broached. Hey, if you're the broker's tenant or the buyer, the tenant's broker. There we go. Very common question to ask a prospective landlord. Hey, what are you offering as far as reimbursement? Now, if I were the landlord, I would not. I'm going to have. If I was landlord's broker, I'm already going to have a separate written agreement with my client. So, what I would put as the landlord's broker in here is I probably wouldn't fill this part out as the landlord's broker. Tenant's broker, you probably want this. You either want this filled out, or you want a separate agreement. Either way. So yeah, if I were just tenant's broker throwing this out, I might fill this out initially, and the landlord's broker might come back and say, "We don't need that in the LOI. We'll send you a separate commission agreement." Right? And this is also pretty common. Tenants are the fees are payable 1/2 at lease execution, and the remainder on the date the lease commences. Extremely common. Also, we have a blank if we want to fill that out a different way. But as I said, this is pretty standard. 1/2 at lease execution, 1/2 at commencement. If it's a sufficiently large commission, you could have some at lease execution, some at commencement, some at X many days after commencement. Just depends. And we have a spot here for special provisions. Now, we all love special provisions, right? But the good news is that this is not a legally binding document. So it's just a letter of intent. So you don't necessarily have to worry about playing attorney here, but I would keep this to simple language whenever possible. So not overly legalese it, but just say whatever those special provisions are that wouldn't normally be covered in a standard lease agreement, you put those in. Non-binding. See, this letter is of intent is not intending to be a legally binding lease agreement. And if this proposal is acceptable, please indicate by signing below and returning a fully executed copy of this letter to my attention with the Texas Realtors commercial lease application or other application form. Then they go through it. Then we can put an expiration on it. This offer will be void after a certain date and time. Then we have spots for the landlord and the tenant to sign. Not the landlord's or tenant's broker, mind you, just the landlord and tenant. So usually the brokers are going to fill this out, get their clients to sign it, and vice versa. Where might a letter of intent initiate from? I think I mentioned before, it could be either party. It could be on the landlord side or it could be on the tenant side. Just depends. And I've been in both situations and talked with the broker on the other end of the transaction. And, we've had that conversation before. Hey, do you want to send over an LOI or do you want me to? Right. Um, that's not the time to play tricks with the other side. The idea is that you've already been talking about deal terms, and they just need to memorialize it so that a lease agreement can be drafted. Of course, this also mentions the commercial lease application. So let's look at that. Now, what I'll say is, in my time in real estate, I've not used the Texas Realtors commercial lease application. What I found is every landlord tends to have either if they're a big enough landlord, they'll have their own application process, or they'll say to you, their broker, hey, I need an application form. Or you'll tell them, hey, you need an application form, right? And one option here is the Texas Realtors commercial lease application. This would potentially capture a lot of the information they need. But then the question is, maybe it doesn't capture all the information they need. Sit down with your client and go through it. If it doesn't, perfectly fine. Just get them to, see what additional information they need to put on there, add that to the application. So this is going to, first of all, the information collected is going to depend on whether the applicant is an individual or a business, right? Two different things. So let's look at the individual part first. Normal contact information, name, email, home phone, mobile, work phone, social security number, driver's license number. So right away, if you are collecting this kind of information for people, you do need to have some secure storage options for this information, because you don't want to have this sitting around easily accessible to people who can grab this information, right? What's their date of birth? What's their home address? How long at this address? And some information about their banking. This is because we want to be able to verify that they have a bank account in good standing. And this is, you're basically running a financial background check on them when you're doing this. So what's the bank name and address, account types, account numbers, contact at the bank, your employer, the employer's address, right? That information. Then on the business side, we have this. So the business name, email for the business contact, their phone number, their tax ID, what kind of business they are, subchapter C corporation, subchapter S corporation, general partnership, limited partnership, limited liability company, professional association. So then if they have another name or DBA that they go under, put that. A DUNS number. So this is essentially for their Dun and Bradstreet report. If they have one of those already, then that's basically the commercial equivalent of a credit report. So if they have one of those, put it on there. What's their current address, current landlord, so on and so forth. So instead of being concerned about the home, they're concerned about the landlord information, right? Their bank information, and 2 credit references, right? So other entities that this business is doing business with, and can say, yeah, they pay me on time. Or, well, you wouldn't put that. You wouldn't put people who don't say that as your references. So what's funny is when I was working my first job in commercial property management, our leasing agents, whenever we would have these regular meetings, and the leasing agents would talk about the types of deals they were working on and the possible tenants. And whenever they talked about a tenant, they would always say, and this is a credit tenant. Essentially what they're saying is it's an established business. It's been in business a long time. We don't need to check credit references. And they're such a big and established business, we don't need to charge them a large security deposit either. My property manager would always joke after the meeting with me, oh, they're all credit tenants, Bart. If you ask the leasing guys, they're all credit tenants, because the leasing guys want as few obstacles as possible to the lease getting done. So in that case, every tenant's a credit tenant. Some emergency contact info, I guess, other than the person submitting the application. And here's some information. So the question for the landlord is, what do you need from a prospective credit tenant, or prospective commercial tenant rather, to make you comfortable leasing space to them, right? And it's not just leasing space; it is the deal with a commercial lease. Landlords are typically putting money out up front in anticipation of future revenue over time. So they're putting up money for tenant finish. They're putting up money for commissions, both on the their broker as well as the tenant's broker. So they need to know that if they're putting this money up, that this tenant is a going entity, right? So what do they need from that? Well, maybe a balance sheet, and probably just not something they've made on Excel, right? But something that's been audited by an accountant. An income statement, federal income tax returns for the past X many years. That's easy, right? It's already done. Proof of funds on deposit or something else, just depending on the landlord and depending on the tenant. And then this gives authorization for the landlord to, at any time before, during, or after the tenancy, to obtain a copy of the applicant's credit report, obtain a criminal background check, and verify rental or employment history, or any other information related to the application. This also notes that the landlord has the right to continue to show the property until they've entered into a lease agreement. I like this. They just say they have a privacy policy that is available on request. And an applicant is going to represent the statements in this application are true and complete. An applicant understands that providing inaccurate or incomplete information is grounds for rejection. And this also mentions that if applicant is providing non-personal public information, it is recommended that applicant do so in a secure manner to reduce the risk of fraud or theft. So they're telling the applicant, you're providing this sensitive information, do it in a way that is not likely to lead to other people having access to it, right? So then we have spots for everyone to give their names and signatures. And we also have a separate related document, authorization to release information related to a lease applicant. So this is the applicant saying, hey, this landlord is going to be asking you information. It's okay to release information to them, right? This gives the kind of information they can release. Employment history, income, landlords, mortgage lenders, financial institution information, and credit report. So there we have that. All right. So it occurs to me that I've been talking for almost half an hour, and I've gotten through the 6-page or the 3-page LOI and the 3-page commercial lease application. Commercial lease itself is 18 pages. It occurs to me that I am probably not going to get through this in a reasonable period of time today. All right, so this is my idea. My idea is that this is a little bit of a wetting your whistle situation, right? That next week for office hours, I can go through the commercial lease document itself. And maybe the week after that, I can go through some of the commonly used addenda and exhibits, and we can go from there. So that gives us a nice kind of 3-week period for going over commercial leases. Hopefully that makes sense to everyone. And if there's something else you would like me to be covering on this topic, around the topic of commercial leases, then I absolutely welcome your feedback, and I'm happy to include that. I think the idea here is that it seems like I'm building out a course to talk about commercial leases, and I think there's probably a 4th week I could put in there about the commercial leasing process, how to find properties. Maybe just go through RPR for that, but I'll show you how that might work. And the sort of things to think about when you are, the sort of things to think about, I think that'll largely be covered in the lease agreement, because anything you're going to think about is going to be covered in the lease agreement. So we'll talk about that, I think. So yeah, next week we'll go through the commercial lease. Week after that, addenda and exhibits. And the week after that, I think I'll just talk about the general commercial search process. All right. Hope that makes sense to everyone. I say, like there's anyone else on the call. I know I'm just talking to myself, but the good news is this is available to review. So we're going to talk about, so I'll change this video's name. So we're talking about commercial LOIs and lease applications. And next week we are going to talk about commercial leases. I hope that sounds fun to you. It sounds fun to me, but that's just something I like talking about. And in my job as a community college professor, I don't get to talk about commercial leases often enough. So it's a bit of a treat for me. All right. Well, thanks for watching. Tune into the next week. And if you are interested in this material, please feel free to subscribe. It's Edu.realestate is the Substack. Go on there, subscribe for free. You'll get notifications when I'm putting up new videos and new materials. And I put up materials all the time for my subscribers, even the free ones. So I think it's worth the click. All right, thanks, y'all. See you next week.